everybody. Thank you. Welcome for joining us. Apparently, I should have had more coffee today. My name's Ann McClure, and I'm a realtor with McEnearney Associates. And you are joining us now or watching us at Ask the Expert, which we do every other week. We bring a local expert in to speak with us about whatever their area of expertise is. And we started doing this because many years ago, I would occasionally host a happy hour where we would invite in several experts, and our clients and friends would come and bring their questions. And it was great for our clients to get answers. It was great for the experts to meet new people who they might end up working with, and just a fun time. And when the pandemic hit, we decided we wanted to do something to support local business and also to get really good quality information out to our clients. And so we brought Ask the Expert online, and we interview one expert every other week. So thank you for joining us. It is really my distinct pleasure to welcome, I'm going to call him my friend, which is
absolutely
true, but it's funny because in 1994, I interviewed with him and he was my boss. And I would say my mentor and biggest influence in real estate. So this is David Howell over there.
Very kind, Ann. It's a pleasure to be here.
And David is...
I work for Ann.
Oh, please. Yeah. David is the CIO and Executive Vice President of McEnearney Associates, and he's one of our owners. He is incredibly well-versed. He's a student of economics. I mean, he's just naturally curious about data and statistics and where trends are going, which makes him particularly adept at doing that kind of research for the company. And we agents occasionally reach out to him for specific help, but look forward every month to his analysis of what's been happening in the DC metro market and where we're headed. And he's a voracious collector of information and a reader. And so he pairs what he's hearing nationally with what's going on economically, maybe outside of real estate. He follows local economists and the George Mason Center for, what is it called, David?
Center for Regional Analysis.
Center for Regional Analysis, which is a great resource for real estate information and local economy information. And David has had many roles that have made him very distinctive and a sought after local expert when talking about real estate and what's going on at a particular point in time. He has been the past president of the Northern Virginia Association of Realtors. He was a founding member of the board of directors of our local MLS, which at the time was called MRIS, the Metropolitan Regional Information System. He is a member of the Virginia Association of Realtors. Not a member, I'm a member. He's on the board and a member. And I'm going to say, from my own perspective, he is an all-around great guy. And when I was thinking about going into real estate, I couldn't have been prouder to work for a firm that was not in a race for market share. Of course, don't get me wrong, we want great market share, but it was more about the ethics and the level of professionalism that one brings to their business and to the industry. And by virtue of bringing a level of professionalism and business ethics, you may always be perceived as one of the best at what you do. And I believe that McEnearney has created that kind of culture. And I thank you, David, for your part in that. I'm so proud to work for the firm, and you have been the biggest shaper in my career. So thank you.
You're overly kind, way too kind, Ann. But I can also tell you that although when I think back to 1994 when I first met you, it took me about 2 or 3 weeks to extend you the offer to hire you, which in reflection, I don't know why the heck it didn't take me about 2 or 3 minutes.
Yeah, or seconds, David, seconds.
I know, absolutely. So it just one of the best decisions in real estate I ever made. And I appreciate your hanging in there with me and with us all these years.
Well, that was an easy decision and continues to be. And so for those of you watching now live, store up your questions. For those of you checking this out later, you can always send us questions later. We will make this available on my website. We'll make it available on YouTube. And we're always happy to answer questions. And we hope you'll share this with your colleagues and friends and family. Anybody you hear talking with real estate questions, there'll be some really good information here, because I'll give Jennifer the credit. She's my listing and marketing manager, who's sort of like the Wizard of Oz behind the curtain, pulling all the strings here. But she said, why don't we kick off the first Ask the Expert of the year with a conversation with David Howell, and we can talk about, what the last year was like. Outside of a pandemic, but how that affected real estate and where we're headed this year. And also, surprisingly, why it might be a good time for a buyer, which many buyers are scared hearing about the bidding wars, but there's really good news for buyers too. So we're going to get into all of that. And David, why don't we just start with a review of how we went into 2020 coming off of 2019 to get a little perspective, and then we'll go from there.
Great, thanks, Ann. One of the questions that we get most often from clients and prospects is, how's the market? And as realtors, we're always coached to say it's incredible. And sometimes that's incredibly good, and sometimes it's not.
Right.
What happens to be right now, it's incredibly good, but it's not the same everywhere. And I'll kind of get into some details in a minute. But and to your question, in 2020, we had, and I've been doing this for 37 years, I've never seen a market like this. We had 3 distinctly different markets in 2020. The year started off on a pretty good roll, not astounding, but certainly better than the same time in 2019. And we all know what happened in mid-March. The market, the economy hit a wall in the middle of March. And by and large, real estate activity, I wouldn't say it was shut down, but it was significantly impaired. Contract activity dropped by about 40% from the middle of March to the middle of May. And then the third phase kicked in. By the middle of June, things were really rocking and rolling. And I don't mean to be in any way insensitive about that. We were very fortunate to be in the residential real estate business and know that there's an awful lot of people in our marketplace that have not been so fortunate. Lots of people lost jobs, lots of service workers, hospitality workers, et cetera. And it's going to be a while before that comes back. But the reality is, and I hope I'm not kind of jumping ahead here, one of the reasons I think that this market has rebounded so well and in such a strong fashion is, along with the San Francisco area, this metropolitan area has the highest percentage of employed people who can telework. And so that has not only bode well for the ability for people who have those kinds of jobs to continue to work and do so safely in a socially distant fashion. And on top of that, I think it's part of what has driven this rebound in the market, which is the longer people have spent at home, the more some people have said, you know what, I need to kind of change my living circumstances. We've heard plenty of stories from clients and friends that one spouse is on a business Zoom meeting upstairs and the other spouse is in a business meeting downstairs, and both kids are in Zoom virtual learning. And they're talking over each other and taxing their broadband access, et cetera. And it certainly hasn't been for everyone, but there's a lot of people who have said, you know what, I maybe need to think about finding a little more elbow room. And we certainly see in the stats indicate that there's a search for elbow room.
Yeah, it's very interesting because I listed a property in Arlington around that time, and not March, but a little bit later into the pandemic. And I remember I thought coming off of January and February, and Arlington's just so hot. I know it's been one of our steadiest, micro markets within our DC metro market. And we just thought we'll go in a hot second. But everything that appealed about that townhouse being close in and right on an urban street, compact space, but you could get out and about. It did make it ideal for people working from home because it was open and it was loud because there were lots of wood and, not a lot of carpet, and and you couldn't get away from each other, and there was no outdoor space. So it was a wake-up call as to what people were looking for. So it resonates what you're saying, because I saw it in my own business, and I noticed things like Great Falls, which had been kind of slow in the fall, was just starting to sell like hotcakes. So yeah, I think that was very obvious. And then, now looking at it, it's obvious. At the time, it was all unfolding, right? But, when I think about the different segments of the market, and we're talking about how incredible it is, right? Either
Yeah,
positive or negative, and mostly positive right now.
sure is.
But are there parts of the DC metro market? We could talk about it in terms of geography, Maryland, DC, Virginia. We could talk about it in terms of housing style, condo, townhouse, large estates, that maybe are doing better or not nearly as well as other parts. And
Yeah.
if so, what advice would you have for those sellers?
Well, let me share my screen here and show you something, because it's, again, as long as I've been doing this, I continue to be astounded by how different portions of our marketplace can be. And I know this may be a little bit hard for people to see, but let me just kind of set the table and explain what it is that we're looking at here. And as Anne gave her overly effusive introduction for me, what she could have just said equally is, I'm a really boring guy.
I could have called you a nerd.
That's more accurate, because I tend to look at data. But Anne, you opened this up very well, because our markets are very different from jurisdiction to jurisdiction and from property type to property type. And I'll just kind of do a quick setup here. This column here shows the available inventory that was on the market at the end of December of 2019 versus the end of 2020, and it shows the percentage change. This column shows contract activity. Is contract activity up, contract activity up or down? And this column, a little harder to understand, is absorption rates. And rather than go into the formula, that simply means is what percentage of the available inventory that's on the market is going under contract in any given month. And just to kind of frame it, we look at any absorption rate above 30% as being in a seller's market, and above 60% an extreme seller's market. So I realize I may have already lost everybody to go into the weeds on the numbers, but
no, but we could just say, David, so when 1 in every 3 homes is going under contract, right?
Yep.
That's a very strong market.
Yep. You bet.
That's an extreme market.
It's actually a seller's market. Anything under 30.
Yeah, that's what I meant. Seller's market. Sorry.
So let me show you just how different things are, and it's to your point as well too about elbow room and the kind of houses that people are looking for in Northern Virginia, and that's Arlington, Alexandria, and Fairfax counties, and the towns within those jurisdictions. At the end of December of 2020, the number of condos on the market compared to the same time year before was up 211%. That's an enormous number. But also take a look at this. Contract activity was up 53%. So it's not that condos are no longer attractive to any buyers. There are still people that want to buy condos. In fact, a good many more. But what the difference is here is that there are a lot more sellers that have condos that want to get rid of them. That haven't been able to do so yet, if that makes sense.
Wow. So wait, David, so this means 53% more condos went under contract in 2020 than 2019?
This is just December,
Oh, December.
Just
Sorry.
December.
Sorry. Okay.
So,
oh, yeah, it does say that at the top. Sorry, everybody.
No, it's all right. But again, it's a lot of data to go through. But this reflects the year-long trends, although not 53% up. Generally speaking, and you'll see there may be 1 or 2 exceptions, contract activity across the board in all 3 property types in all of our jurisdictions is up in 2020 compared to 2019. And if anybody told us that in the middle of March, that that's what this year would look like, we just said that's not going to happen, because we're looking pretty grim in the middle of March. So
it was doom and gloom. I remember Mark Cuban saying real estate's going to tank on TV.
Yeah, absolutely. So, but what it is it's different. Even though the demand side of the supply and demand equation is up, the supply side is very different. So again, looking just at Northern Virginia, a 211% increase in condos. But if you take a look at these notes here, and I had to check these numbers 3 times because they were so stunning.
They're incredible, to use your word. They're incredible.
Since Northern Virginia encompasses Fairfax County and Arlington and Alexandria, that's a pretty big geography. So looking at a little bit more details, in Fairfax County, condo inventory is up 102%. It's double what it was last year.
Wow.
But look at these numbers. In Alexandria, it's up 433% and 495% in Arlington. And because those numbers were so startling, not only did I check and recheck the numbers, but I started to wonder, why would that be the case? And I can speculate on what the answer is. And people that are watching this or thinking about this will be the best judge of that. But before I answer why that's the case, I also want to look down at Washington, D.C.'s numbers here. In Washington, D.C., condo inventory is up 65%, not quite as much as it is in the very close in Virginia suburbs. And even though contract activity is up, the absorption rates for condos in DC are in the balanced segment of the market. So, and again, to kind of frame the discussion, Loudoun County, not all that far from Northern Virginia as a whole, but a very different market. Unlike Northern Virginia, unlike Washington, D.C., condo inventory in Loudoun County is down. Now, it's not a big part of the market in Loudoun County, but it's down. So inventory is down, contract activity is up, and look at these absorption rates for condos, detached homes. In all three of these categories, they are either in the top end of a seller's market or into the extreme seller's market category.
Which you said was over 60%.
You bet. So another way to take a look at that, and I know I'm kind of jumping around here, right now in Loudoun County, there is just over a 2-week supply of homes on the market.
Wow.
2 weeks. And that's about as low as I've ever seen. And the same thing is the case in Prince George's County.
And you guys, David's been doing this for a long time.
As hard as this may be to believe, I actually had brown hair when I started doing this. And you knew me.
I just have to rib you a little bit. Yeah, I know. I remember, actually. I think I even have photos.
So the question that I'm going to try and answer is, why? Why are the differences so stark in the condo market? And this is my speculation. When we say condos, realistically speaking, and sorry for the phone ringing in the background there, when I say condos is an ownership type, but condos are not all the same everywhere. So a condo in Loudoun County might be a garden, like a garden style apartment building, where you walk up 1 or 2 floors to get to the absolute top of the building. And when you walk out, you're walking outside to open areas, et cetera. Whereas a condo in Roslyn or in Old Town may be a 20-story building, maybe a 25-story building, where you're in a shared elevator with lots of people getting to and from your unit. And there's nothing wrong with that lifestyle. There's a reason that those have been attractive for a long time. People have loved living in an amenity-laden community that's walkable to restaurants and shops and all that kind of stuff. But COVID changed the equation on that. None of us know how long it's going to change the equation, but I think here's the reality. Even more so than in Washington, D.C., where condo inventory is up, it is up so much in Alexandria and Arlington because of the kind of condos that exist in those markets. They are by and large very dense, higher rise apartments or units than they are even in Washington, D.C. Washington, D.C.
Really?
Yeah, Washington, D.C., when you think about it, with the height limitations in Washington, D.C. topping out at 9 stories, and there are certainly some large buildings in D.C., but not like there are in the immediate Northern Virginia area. Or you think about the Rotunda in McLean, which has 5 buildings with 1,100 units. That is, although there's wonderful open areas in the Rotunda, that's fairly dense living. So my speculation is that the reason that inventory has climbed so much in those close-in areas in Northern Virginia, and to a little lesser degree in Washington, D.C., is that elbow room term. There are a lot of people that own those condos that would just as soon not own those condos. So even though there's been an increase in the number of people buying, there's been an enormous increase in the number of people who want to sell, who want to get out.
So David, when we see numbers like 433% in Alexandria and 495 in Arlington, which is really inverse of the effect we thought the Amazon situation would have. Of course, that was before the world went upside down. But what does this mean in terms of the month supply? You know, how long it will take for these properties to get?
It's a great question. Well, and I'll give you a shot at giving an answer. It goes back to some of these numbers. Again, with condo inventory in Northern Virginia up 211%, attached home inventory, townhouses, et cetera, is down about 11%. Detached home inventory is down about 30%. So, and you look at contract activity up significantly for both of those property categories, and look at the absorption rates. For attached homes, townhouse in Northern Virginia, it's an extreme seller's market. And of course, there's always going to be sub-market differences. One particular townhouse might not be as good as another, but, and the better answer to your question is, the overall supply in Northern Virginia right now is 1.2 months. But for attached and detached homes, it's closer to 2 or 3 weeks. For condos, it's more like 3 or 4 months.
Wow, I'm surprised it's that short.
Yeah, you bet. So again, I would be more concerned if this huge jump in inventory had been accompanied by a drop in demand. So it's not that people don't want to buy condos. It's just that there are relatively more people who want to sell them than there are people who want to buy them right now.
It is an interesting dynamic that the contract activity has increased, but even if it's increased this much, the inventory has increased this much. So that's what we're seeing here, right?
You bet. So if I had done my homework a little bit better and had a graph, I know you can't really see my hands really well, but it used to be that the lines between contract activity and inventory ran very much parallel to each other. Well, that gap is widening now, and you think about the gap as being the supply. So there is relatively more supply of condos in Northern Virginia and Washington, D.C. than there is demand for it. So again, it's not a time to hit the panic button. And we're going to do some more research on this, but part of my speculation on this is that some of this condo purchasing is actually investors, because prices are, in the face of this abundance of supply, there's very little, if any, upward pressure on condos in these close-in locations. And while that might be concerning if one was currently a seller, it also presents an opportunity for buyers, meaning that with the feeding frenzy that's going on elsewhere for attached homes and detached homes, buyers can drive a bit of a harder bargain for condos right now in general. Again, there's always going to be exceptions, but they can drive a harder bargain for condos right now than they can for attached and detached homes. So we've seen some anecdotal evidence that there's some smart money from investors that is now going into the condo market with the ability to buy, hold it, rent it, with the anticipation of selling it when the market returns to a more normal level of balance. You can't prove it all, but anecdotally, that's what I'm hearing from all of you all.
So for anybody watching this, if you want to invest in condos, I do know a good realtor. David, this is really amazing. And plus, the other amazing thing is just to see something like attached, meaning townhouses or duplexes or whatever, in Loudoun County, the absorption rate at 78%.
Yeah. That's about as high as we've ever seen. I mean, it's from any particular month, you might get something that will occasionally clip into this area, but this has been the case for townhouses in Loudoun County for second half of the year in 2020. And that's almost half of the housing stock in Loudoun County. There's a lot of townhouses in Loudoun County. So again, we hear anecdotally and from you and from your colleagues that, from our colleagues, that we've got a number of clients that have been looking for elbow room, that people that want to sell their 2-bedroom condo and move into a townhouse, or people that want to move from their townhouse to a detached home. And so it's, everything else aside, we know that although we can say generically and accurately, the real estate market in the Washington metropolitan area is very strong, and it absolutely categorically is. And again, 9 months ago, I would have never believed that this is where we'd be sitting today. But it's very strong, but it's also very different from area to area and from property type to property type, and within price ranges as well too.
I talked with an agent since you and I chatted yesterday at Smith Mountain Lake, Southwestern Virginia, down by Roanoke. And he said he's been on the lake for 28 years. He has never seen property move this fast.
Yeah, you
because
bet.
of the people who are looking, hey, if I got to work from home, I can work anywhere. And they're buying second homes and vacation homes.
You bet.
But David, this is interesting for perspective, because like you said, this is December 2019 to 2020, December 2020, comparing the two. So we're heading into the spring market. And it's funny when I use that term with my clients, a lot of times they correct me. I'll be like, well, Ann, it's January. And I say, it is January. But when we realtors get a call in January for something we're teeing up for March, we always think of it as the spring market.
Sure. You bet.
Where do you see it headed? Because these numbers are extraordinary now. And so in my mind, which is still, about 20 years now, if you can believe it, that I've been doing this.
Yeah.
Okay, this is the time of year where we're gearing up, and then it's going to be all out bedlam by mid-February through May.
Yep.
But how much crazier can it get?
I don't think it's going to get any crazier, but I also don't think it's going to get less crazy. And it's as crazy as it is right now, in part because of COVID, but in large measure and because of interest rates. Ann has heard this story multiple times, but Ann and I had the pleasure of working for John McEnearney, who was the founder of our company. And when he started this company in 1980, interest rates were at 12%. 1 year later, interest rates were between 16 and 17%. And for anybody that's listening in on this, that may seem like fiction, but it was real, and people were paying 5, 6, 7 points on a loan to get a loan. But people still bought and sold houses. And unfortunately, we lost John about 4 years ago, a true gentleman, a wonderful guy to work for and work with. But were John alive today, John would not believe that we have now seen months of sub 3% 30-year fixed rate mortgage rates. It's astounding.
Yeah.
And so I'm not suggesting that everybody should go buy a house. And if you do, you should buy it from Ann. But if everybody,
you guys
not
heard it
everybody
here.
should buy a house, and it's an intensely personal decision. But I believe that 5 years from now or 10 years from now, we're going to look back at this time from the last quarter of 2020 through the first couple of quarters of 2021 as, because of interest rates, the single best time to buy a house, at least in as long as I've been in business. And that's been a while. And that doesn't mean other times were bad times or anything else, but we rarely have the confluence of circumstances that, well, not to put too fine a point on it, this time last year, interest rates were still unbelievably attractive, but they're just more than a full point less today than they were a year ago. And from a buyer standpoint, that translates into a 14% increase in buying power. With the same income, you can buy a 14% bigger mortgage with the same payment, a 14% bigger mortgage than you could have even a year ago. And a year ago, the rates were amazing.
Yeah, I mean, that's a huge difference, 14%. So like buyers watching this, or if you're watching this and you have kids or colleagues or whomever who's a buyer, this is the great news. Yes, it's tough and it's competitive out there, but what David just said is key. I mean, money is almost free. That's how it feels, sort of. And you can get an incredible interest rate with no points, but you have 14% more buying power than you had this time last year. I mean, that's pretty unbelievable.
Yeah, it really is. And we all know that when a really hot property comes on the market and there's multiple offer situations and lots of buyers are competing for that same individual property, that's a tough time for buyers. And it's a tough time for their agents as well, to manage that process. And we're not blind to that fact. But honestly, those circumstances, I hope this is okay for me to say, Ann, always make me a little bit nervous. What we generally suggest to buyers in a multiple offer situation, because the inevitable question we get, and it's the right one, is how much am I going to have to offer to get this property? And none of us have a crystal ball.
Right.
But Ann, please feel free to disagree with me because I didn't run this past you. But my generic answer, which isn't a really good one, is make your best offer. And the best offer is defined this way, that if you win and you get the house, that you don't kick yourself because you think you offered too much. And the best offer is the one that if you lose, you don't kick yourself because, I could have gone higher. So that doesn't really answer the question. It doesn't give the crystal ball. But what I do encourage buyers not to do is to get caught up in the feeding frenzy, where the objective becomes, I'm going to win. I'm going to get this house. That feeling generally leads to bad decisions. If you're in the middle of that feeding frenzy right now, just remember there will be more listings that come on the market.
Mm-hmm. I have always said to my clients, similar to what you just said, you know, not what is the price you're willing to pay, because often what you're willing to pay, you might go, oh, well, that guy paid 500,000. I would have paid 502, you know, or that guy paid $1 million. I would have paid $1 million, you know, I don't know, 10 or whatever. And what happens is what you're willing to pay and where you're willing to walk away are often two different things.
Yeah.
Where you're willing to walk away is, if that guy's going to pay that for it, he's crazy and he can have it. And then you have no regret, because regret is really, like David said, you don't want to be kicking yourself or, you know, slitting your throat or worse,
yeah,
because of a decision. So
yeah, it's
a tough market, but you still got to make sense of it for you, right? So
absolutely.
David, that was really good about the 14%. Like, you had that calculation, because we all know it and can sense it, but it's nice to see it numerically what the number is.
Yeah, you bet. Frankly, I'll just tell this story on my wife and myself. We didn't want to reset the clock on our 30-year mortgage that we originated about 6 years ago. We're in the middle of a refinance right now because the interest rates are just so good. So good.
Yeah. So I want to emphasize that there is good news for buyers in this market, that it's, you know, it's not all doom and gloom, because the inventory is so, you know, so crazy.
Yeah.
So I just was looking over my notes, because we bounced around a little bit, and I wanted to make sure that
I do that to you all the time.
Keep me on my toes. So do you think, I know we need to wrap up, but do you think that COVID has had an impact on how people see real estate, and that it will continue to affect buying trends? I mean, we talked about in the short run. Right now, we already see how it's affected the condos, but do you have any thoughts on where this might lead us in the future?
Yeah, I do. And it's honestly speculation. At the risk of sounding pretty corny, home has never been more important, because we've all, I shouldn't say all, many of us have been spending far more time at home than we ever have before. It would not have been at all unusual for workers in this metropolitan area to rarely see their homes in the daylight, just given what commuting patterns are. And we know all of our fur babies, our dogs and cats, are wondering just what the heck's going on with all of us at home as long as we are. But because of that, it certainly has caused a decent percentage of people to wonder if where they're hanging out so much of the time is really where they want to hang out. Sadly, in some cases, it's caused some people to think about, are the people I'm hanging out with the people I want to hang out with? That's another story.
Yeah.
But I do think that because of COVID, and because we have so many people that not only can telework, but actually are teleworking, I think there's going to be a long-term change in the nature of offices and of office space. And while I do think, because we all crave connection with people live and in person, we probably all had our fill of Zoom meetings and Facebook Live, et cetera, as fun as this is, and it is. I don't think this is a permanent, significant shift away from the inner city and out to the outer suburbs, because frankly, that really hasn't happened in a big way here. The shift has been more modest, and you probably heard me use this before. Has this been a ripple or a wave or a tsunami? I think it's closer to a ripple. And one of the things we've also learned over the years is nothing's permanent in this market. There's a reason that people gravitated to the city center in this last boom cycle and wanted to be near restaurants and walkable communities, et cetera. And that's not going to go away. There will be, to the extent there has been, a migration to the outer suburbs. I think we'll see some of that come back, but it's going to take a while. Let's face it, it's going to be a while before we're all really comfortable that the combination of the vaccine and herd immunity is such that we all feel good about congregating again.
Right, right. I thought it was interesting to see how buying and remodeling or renovating changed with the family unit changing, you know, with kids living at home, with maybe the grandparents living there. And that was interesting how that's even changed housing styles, like the physicality of how people live.
Yeah.
I know that we need to wrap up. I just want to ask you one more question, my last question, which is, I was thinking about what you said with contract activity. And I thought, well, how's this going to affect price appreciation? Like if you were giving a general forecast for the year.
It's a great question. Nationally, NAR anticipates price appreciation in 2021, which is purely speculation, but it's based on consensus of a number of economists, and I'm not an economist. They're looking at price appreciation nationally of about 6%. I think we will see that and then some in this market, but we're not looking at double-digit appreciation like we saw in the insane housing boom in the middle part of more than a decade ago.
Yeah.
It was fueled by funny money, by mortgages that people shouldn't be getting. But again, it really depends on location and property type. We're not going to see those kind of appreciation rates in condos, close-in condos, because again, there's an oversupply relative to the demand. So I would expect condo prices to be fairly flat in close-in communities, where attached and detached homes, we're likely to see 6, 7, 8, maybe even 9% appreciation.
Okay, well, you know what? We'll take it, right?
Yeah. But a year from now, don't come back and quote me on this, because
David Howell said, no, what I'm going to do is my next guest is going to be a divorce attorney for all the people who are houses together. Or maybe we need like a monk or something to bring peace to everybody.
Love it.
David, thank you so much. I know, Jennifer, we've run over. I don't know if there was anything you wanted to add or any pressing question. You're on.
You're still muted, Jennifer.
You're muted again.
Sorry about that.
Got it.
I didn't actually want to be on video, but hi, everybody. We've gotten some great viewers today. And I want to say hi to Amber and Joel Hill, who are, they are saying nerd it up. They love the stats. So,
oh, good.
I'm the nerd. There you go.
Hi to them.
Thank you, guys. Good. All right. Well, I'm so glad that they were watching. Their favorite clients I met years and years ago at an open house, and we've stayed in touch and become friends, which is great. And I know, Amber, I owe you money for Girl Scout cookies. Amber is doing a great thing in donating to a local hospital. I hope that's okay that I said that.
That's awesome.
So I just want to thank my guest, David Howell, for coming today. He is just, as you see, a wealth of information. If, as you're watching this, you all think of questions that you have, please reach out to me or Jennifer. Email us, call us, text us. We love to hear from you. We'll certainly take them to our local guru and get them answered as best we can, or he can. And of course, any real estate questions, anything house or home related. We love bringing you experts. We have lots of great experts, and we consider it one of the really valuable things that we can do for our clients and our friends in the local community. So please do share this video with people. Don't keep us a secret, and stay tuned. We're going to bring you another great expert in 2 weeks. We thank you for joining us, and thanks to our guest, David Howell, again.
Thanks for having me, Ann. It's a pleasure.
Of course. And thank you, Jennifer, for being our wizard behind the scenes and this week in front of the scenes for a few seconds. And we'll see you guys all next time. Thanks.
Thanks, everybody. Stay safe.